U.S. Currently produces more oil and gas than Saudi Arabia and Russia combined. So, why is a conflict 6,000 miles away in Iran suddenly spiking prices at the pump and costing the American economy like an estimated 10,000 jobs a month? Welcome to The Debate. Today, in the wake of the president's recent address, we are asking a vital question. Does America's massive domestic energy production guarantee long-term financial stability? Or do current market shocks prove our global economy is permanently vulnerable? I will be arguing that U.S. energy dominance functions as a structural shield, ensuring our long-term market security.
And I will be arguing that because global supply chains are just so deeply interconnected, these international shocks translate directly into lasting economic damage right here at home. So true economic insulation is an illusion.
Yeah, so let's start with the raw structural reality of what we've actually built. We are producing energy at an unprecedented level right now.
We are.
And when you combine our massive domestic oil and gas supply with the permanent neutralization of a major regional threat, you build a foundation that, frankly, should make current market fluctuations just short-term noise. We actually have the physical resources to outlast the panic.
The physical resources, yes. But financial stability isn't just about what is in the ground. It is about how the world prices it. The Strait of Hormuz facilitates 20% of global oil transport.
Wow, right.
Yeah, so when that is threatened, the market fallout is immediate. Following the president's address, Brent crude, which acts as the major benchmark for global oil prices, it jumped over 7% to nearly $109 a barrel.
Let me stop you right there, though, and play devil's advocate for the listener, because there is a bit of a disconnect here.
Okay.
Only about 7% of U.S. crude imports actually travel through the Strait of Hormuz. We pump our own oil. So mechanically speaking, why does a bottleneck over there instantly drive U.S. gas prices up to $4 a gallon over here?
Well, because oil is a globally priced commodity, right? It goes into a giant global pool. If 20% of the world's supply is suddenly trapped in the Persian Gulf, buyers in Europe and Asia panic.
Sure, they bid it up.
Exactly. They start bidding up the price for the oil that is available, and that includes American oil. So domestic producers sell at that higher global price. That is exactly why international markets don't care about our domestic insulation.
But wait.
And it doesn't stop at the gas pump either. Look at Asian stock markets. South Korea's Kospi index dropped 4.5% simply because of soaring fuel costs.
Right.
When their manufacturing gets more expensive, the everyday goods we import get more expensive. That is how a supply shock 6,000 miles away starts sputtering the American economic engine and, costing us those 10,000 jobs a month.
Okay, but we have to look at the timeline of that disruption. Yes, the price of the global pool spikes temporarily, but think of our domestic production like a heavy-duty hydraulic suspension system.
A suspension system?
Yeah, it doesn't mean we won't feel the pothole when global prices jump. We clearly do, but because we control our own massive supply, the axle doesn't break, The vehicle stays on the road.
I see what you're saying, but
Once this conflict shortly concludes and the strait naturally reopens to sell that oil, the bottleneck clears. Because our underlying fundamentals are so strong, our prices will rapidly normalize and the market will just roar back.
But relying on a natural reopening is an incredible gamble. There is no concrete timeline for that bottleneck to clear. The administration is floating, a 2 to 3 week window?
Yeah, roughly.
Right, but at the same time, they are threatening to hit electric plants if a deal isn't reached. Markets can price in bad news, but what they absolutely cannot price in is uncertainty.
Sure.
Prolonged market uncertainty drains capital investment and slows down hiring. You just can't base long-term economic health on the assumption that global supply chains will magically sort themselves out while bombs are still falling.
But the end game of the military objectives is nearing completion, and it is in the fundamental economic interest of the entire region to get that oil flowing again.
True.
The moment it does, our domestic engine takes over. That unprecedented production capacity is what fundamentally insulates American long-term prosperity from lasting damage, even if we do take a short-term hit.
Well, my position remains that the immediate job costs, the spiking gas prices, and the international volatility prove we are too intertwined with the world to pretend we can weather the storm alone. The lasting damage comes from the uncertainty itself.
Well, we clearly agree that the global energy map is undergoing a radical shift right now, and the true extent of America's economic insulation offers much more to explore in the material.
Absolutely. I think the economic data over the coming weeks will reveal the true limits of our independence.
Right. The U.S. may have built the most well-stocked energy fortress in history, but we will soon find out if any economy can truly thrive in isolation, or if we all inevitably pay the same price at the pump.